Hi everyone, in this video I'll discuss events from the 12th and 13th of March 2020, particularly in the context of explaining why 3.6 and 3.8k were the bottoms for derivatives and spot exchanges. Why didn't the price go lower? What actually happened to prevent the price from cascading further down? Because there was certainly scope to go further down. As always, please give me a thumbs up and have a look at the links in the description below. In this video, I will discuss influence of BitMEX with their insurance fund going 400 million long, possibly. I'll discuss BitMEX possibly pulling the plug on their exchange to allow the price to rebound. I'll discuss actions of BlockFi, who didn't liquidate their customers, Deribit, buying some Bitcoin and injecting some money into their fund, spot buyers, and decentralized finance. So obviously the price went down so much because of a very rapid nature of the move down. This has broken many risk models based on the past performance and surprised almost everyone. The Bitcoin price went down around 40% and Ethereum went down 50% in a day. Many entities, even the ones having reasonable risk management, had their balance sheet irrecoverably destroyed. If this move was twice slower, I believe it wouldn't go as low. Liquidations were even worse on Ethereum than they were on Bitcoin. And this is just the chart of what happened at the very bottom. So these are the tickers. This is the area where BitMEX stopped functioning correctly, stopped accepting and executing orders, and this was what allowed the price to really rebound. So BitMEX has been one of the major drivers for the massive dump. However, BitMEX exchange has been a massive buyer near the bottom. At the very bottom, they have probably been $300 to $400 million long, and by them I mean their liquidation engine. Going long 400 million certainly helped in preventing Bitcoin from going lower. Now you could say that without the massive liquidation engine position, auto deleveraging could have saved the day by closing some shorts, but I think that this thinking is flawed. Majority of gamblers have been liquidated at these levels and hardly anyone had access to funds, and the short entities were mainly sophisticated entities carefully managing their exposure, I think. After auto deleverage, they would immediately reopen the short position regardless of the price just to keep their exposure to Bitcoin where they intended to be. I don't think that they would agree on going YOLO long without any cover. This has been easy to observe on Kraken futures, where I assume that liquidity backstop providers were puking out their positions at the very bottom. At the end of the day, the liquidity backstop provision is supposed to be profitable, but it has not been so on the 12th of March. And the liquidity backstop providers, they had to sell everything that they have acquired, regardless of the price, just to maintain the risk profile and exposure to Bitcoin. BitMEX possibly has pulled the plug. So these are my impressions of the events. Like it was really mayhem, and it was obvious that a lot of entities are completely wrecked. These are my thoughts about the insurance fund going around $300 to $400 million long. And this is an insane theory from SBF, from Alameda. So BitMEX possibly pulled the plug on their exchange. They deny it, but if they did it, it was great, thumbs up. This was the initial impression of Sam Bankman-Fried from Alameda Research. Alameda Research are big traders and they have very good understanding of liquidation engine, and they discuss BitMEX liquidation engine many times in public. It surprises me actually that Sam entertained the idea of liquidation engine liquidating down to zero in this post. Here he says if R goes gets above 1, we are all screwed. Why is this? Because there is 10 million liquidation, which moves the price down X, blah blah blah. So there is positive feedback loop, and liquidation can go down to 0. Well, actually, it cannot go to 0. I thought that he would know the liquidation engine would get liquidated itself somewhere at around 1 to 3K, and the exchange would be left with also the leverage only. Sam backed off from his allegation and accepted BitMEX explanation, saying that they had no incentive to do so. However, it is obvious that BitMEX insurance fund was almost wiped on that day. Allowing it to get completely wiped would mean that their exchange has just lost 36,000 Bitcoin, which at the current price, now in June, is worth 360 million, more or less. BitMEX said that they were DDoSed, and these are the screens from their management of the databases. I think it is plausible that BitMEX has pulled the plug, citing a DDoS attack. Thanks to that, the cascading liquidations were paused, and the price promptly rebounded if it was them doing the DDoS. However, it could have been someone else doing the DDoS and saving the day. These are my thoughts from another video of mine where I discuss liquidation engine and other stuff, mainly the technicalities of how BitMEX works and how engine works different to other exchanges. And in that video I say that if the liquidation engine, well actually this is the quote from BitMEX in their post-mortem, if the liquidation engine algorithm had chosen to close the outstanding position at the mark price, assuming the sufficient liquidity, which was not instantly available, the largest total drawdown from the peak balance on 12th of March would have been 8,500 Bitcoin, more or less. And that is closing at the mark price. But the last traded price was significantly lower. So you can see on the picture here that actually the last traded price was around 200 or more dollars less than that. And here I conclude that I guess that if liquidation engine was to panic sell the bottom, the drawdown could have been in the range of 15 to 35,000 XBT if they were to sell to the market, because there was a massive discount and they would cause the price to go further down. BitMEX is an exchange built in a bulletproof way to handle the most severe volatility. These guys are prepared for absolutely everything. I think it is possible that someone has a bot that can DDoS their own exchange and take it down for a moment as an insurance policy. Now I think they are good guys. I like them. I think it's unlikely, but I think it is possible. Liquidation engine getting liquidated sounds like Hoover hoovering itself, but the technicalities of this would be that the auto deleverage price for the shorts would be pretty bad compared to the last traded price on BitMEX, because there was a large discount. Because of that large discount, which has grown over time, large amounts of traders discovered that going long 100x is extremely lucrative and has fantastic risk to reward ratio. I believe there were tens or hundreds of millions of dollars bought this way and then sold at higher levels. And I have certainly participated in that. I have done my 100x long, and it has turned out good. Okay, and I think this is all I had to say about BitMEX. I think it is possible that they have pulled the plug. However, they have been they are the biggest open interest exchange, and they were the reason. Well, like traders using their exchange and having poor management were the reason. But the exchange, their liquidation engine going so long, and then some issues with the exchange being slowed down at peak volatility, I think this has contributed to price not going further low. So let's move on to the next entity, BlockFi. They are the big lender. They issue loans backed with crypto. BlockFi has openly admitted that they did not sell any assets at the very bottom, despite them entering the liquidation range. I believe it is most reasonable for them to hedge all exposures on derivatives markets. Also, I believe they are believers in the ecosystem and they didn't want to push the price lower. I think that they have seen massive negative rates and decided not to sell because the only way to sell was to sell at a massive discount, and selling would push the price down further. So thumbs up, they got lucky, and this is their statement. So last Thursday, which is the 12th of March, there were particularly violent downwards price movements in the cryptocurrency market, resulting in very limited liquidity. This was handled strategically by our team and risk management system, and we did not liquidate US dollar loan client collateral below the price of 4.5k, despite the market reaching lows of 3.8k. As a result of the team's prudent actions during the period, our client's capital was saved, and we also liquidated a smaller percentage, less than 10% of our overall USD loan book versus other market participants like BitMEX liquidated almost everyone. So essentially, BlockFi went YOLO long at the very bottom, and they kind of took risk, because if there was a sharp move to 1k, then they would be in trouble. But they have probably carefully assessed the risk limits, carefully assessed how expensive would it be for them to hedge at the very bottom, and they decided not to liquidate. So, hats off. Next entity that I would like to discuss, which also helped, was Deribit. Deribit had their insurance fund completely wiped as well. By as well I mean they had completely wiped. BitMEX didn't have their fund wiped. The fund went into their negative territory, but they have immediately announced that they are injecting 500 Bitcoin and later some more into their insurance fund. That means that they have purchased 500 Bitcoin just at the very bottom. Well done, hats off. They avoided some bad publicity, because if they didn't do that, they would have to issue a clawback, first clawback on their exchange, and that would cause some bad PR. All the winning traders would have to chip in to contribute to that loss. The next good entity are spot buyers. They have stepped in big time and bought a lot of Bitcoin. Majority lacked sophistication and did not know that they can get leveraged up easily and cheaply on derivatives exchanges. I'm sure that many of these buyers would go 100x on BitMEX if they knew that they could do so, with liquidation price being a few $100s below the entry price. The next entity which could have helped was decentralized finance. Obviously, decentralized finance has liquidated a lot. As expected, DeFi has failed at this massive price decline. It has not only failed by allowing someone to buy several $1 million worth of Ether, essentially for $0 US, it has also failed to liquidate bankrupt users. Because of the delayed transactions, because the Ethereum network was completely congested, oracles did not update prices in time, and some users were not liquidated on time. So some users could have gotten away. They were able to deposit funds before their liquidations were executed. So that kind of wraps it up. That was a really big day. That was the biggest shakeout in the history of Bitcoin, I think. I don't think it will ever happen again, and I think it's reasonable to finish with what happened afterwards. So shortly after, the 10 million liquidations have stopped appearing, so I was carefully watching for that. BitMEX liquidation engine had no more contracts to sell. The doom was officially over, and I have tweeted that exactly the moment it has happened. Good luck to the 100x 10% below mark price squad, which has won big time on that day. And I think it's reasonable to finish with this prediction of mine from 15th of March. With this plan, the worst possible outcome is to be leveraged long, get shaken out on a dip, miss the cheap Bitcoin buy opportunity, and then miss the moon waiting for a dip. There's no other scenario as bad as this, because I can't rebuy too much when the price climbs back to 10k. And guess what? We are back at 10k. Thank you very much for watching. Please give me a thumbs up, comment and subscribe. I actually respond to comments. Please have a look at the links in the description below, which will save you some money on trading fees. I recommend several exchanges, and the trading fees really, the trading fee discounts really build up over time.